All right. Well, hey everyone. Thanks for joining us today. In just a second, I'll give you a little bit of context around who you're hearing from. I'm going to hand over the mic for Erika. She's going to go into all of the great tips. And then, like I said, we'll leave time for Q&A. We'll share some resources. In under an hour, we'll let you go with hopefully at least 1 to 2 things you can walk away with and implement in your business. So without further ado, I'm Kristina Simonson. I work at TaxCloud. If you're not familiar with TaxCloud, we are a end-to-end sales tax compliance solution. My role here at TaxCloud is primarily to work with our accounting and bookkeeping firms. I'm really excited today to be joined by one of our partners here at Tax, Erika Millard. Erika, I'll let you introduce yourself.
Yeah, well, thank you so much for having me. I'm so excited to be here. I am Erika, and my business is Bookkeeping with Erika. I host the Get Comfy with Numbers podcast as well, where we talk all things making money easy for entrepreneurs. And I live in the Birmingham, Alabama area. When I'm not doing bookkeeping or podcasting, we have 4 young kids and love to explore ice cream shops around Birmingham. We actually did an ultimate cone off this summer where we went to different ice cream shops and rated our favorites. So that's how intense we are about it.
I love it. What's your favorite flavor?
Man, right now there is a shop here that has one called Graham Central Station. And so it's like graham crackers and chocolate chunks and caramel swirl, and it's really good.
Love it. Ooh, that's good. My favorite's always been coffee. It's like a classic. But now I'm craving ice cream, so I'm sure we're answering
You're
all the
welcome.
important questions first. Well, Erika, as I said, really excited to have you here. So what we're going to do, we're going to jump right into it. So like I said to everyone, Erika's going to run through her 7 tips. I'll jump in with a little one at the end, and then we'll go from there. So Erika, I will give you the floor.
Yeah, well, thank you. I'm really excited to be here. And I just want you to know that if you are on this webinar and you've ever felt overwhelmed or confused by QuickBooks, you're not alone and you're in the right place. So I'm hoping to give you some very practical tips during this webinar so that, like Kristina said, you can walk away with some things to implement and hopefully prevent some headaches going forward. So I love to keep things simple and easy and jargon-free, but if I ever say something that you're like, I don't even know what that word means, just throw it in the chat and I'll be happy to explain further. So my first tip sounds basic, but people get this wrong pretty often, and that is to keep your business and your personal transactions separate. And we want to do that for a few reasons. The first is for compliance and just clean reporting. I actually have worked with 2 clients in the past few months that had thousands of personal transactions linked into their QuickBooks. And so it is overwhelming to go through that and separate it. It can be really confusing because sometimes you're having to dig through, wait, was that Amazon purchase actually for business or was it for personal? And it's really hard to figure that out months later if you have not kept up with keeping these items separate. But then a lesser known struggle of this is that it can actually cause some legal issues. So if you are an LLC and you have a formal entity created in your business, legal term is that you have pierced the corporate veil, which just means that when you have created your LLC, your business entity, it has created a veil or separation so that you're keeping your business and your personal assets separate. And so you're not able to be sued by the things in the LLC. But if you start to mix your business and your personal too much, they can't really figure out legally, well, where is this separation, because you're not acting like you're separated. So that is actually hopefully a good enough reason to actually keep things separate. Now, if you once in a while are out and you use the wrong card on accident or you don't have the card with you, that's not what I'm talking about. It's the thousands of transactions type of thing where you're always using your business card for your groceries or things like that. So the very first step is go open a separate bank account for your business business, as much as you can, flow all of your income, all of your expenses through that business account, and really try to keep your personal expenses and personal income separate from that. This will also help you make better decisions because, like the clients that have had it all tangled together, it's really hard to know how your business is actually doing. And it can be really confusing when you're going to make decisions on, well, how much am I paying myself, or how much am I actually spending on office supplies? Well, if everything from Amazon is all mixed together, that is really hard to understand. And it can be really expensive to hire help because we're having to sift through all the thousands of transactions and taking a lot more time going back and forth. So hopefully that is clear. Keep your personal and your business separate for all of those reasons. And especially if you're just starting out, if you can do this from the beginning, it will be so much easier.
Awesome.
Our next tip is this is specific to QuickBooks, and this is to use the rules feature to save time. So first, that means that you've got to have your bank and your credit cards linked into your QuickBooks. I was just talking to a client a few weeks ago, and he said, "Oh yeah, I'm super comfortable working in QuickBooks, but the bank feed, like, do you ever use that?" And so if you are not using the bank feed, if you're manually entering every single transaction in QuickBooks, you are not doing it the most efficient way, because rules is really automations that help you save a ton of time once you get these set up. So these are mostly or most often used for the repeat transactions. So like you can see in this example, something like Google, or if you have an email service provider or other subscriptions that you have the same set amount that is being withdrawn that you're paying every month, then you want to set these rules up so that QuickBooks will say, okay, well, if this bank transaction meets this rule, then we'll always categorize it to dues and subscriptions, or to supplies and software, or to whatever is relevant to that transaction. And you can actually even set it to auto add so that you don't even see it being in your items or your list to review. It will just automatically categorize things for you. And so that really can reduce the time that you take to manually categorize your transactions. You do want to review this pretty regularly for accuracy, just to make sure that all of your rules are still relevant. If you could show the next slide, we have some examples of where you can see to the left a little bit more in detail what it looks like of creating a rule, where you can select the category and you can also select the vendor name so that you have all of that information in there. And then here's just a summary where it shows a handful of those rules in action, so that that's how it would look all set up once you have several. And then maybe just quarterly or every once in a while, review those to make sure that's still the place that you want those items to go. But this also really helps you stay consistent with categorizing, because sometimes if you're really only doing your bookkeeping every month or looking at your transactions every few months, it's really hard to remember, where did I categorize that the last time? And so this will help you keep it consistent and save you a bunch of time.
Awesome. Erica, actually, I had a question for you. Is there like a limit of rules you could create in QuickBooks, or a recommendation of, is there like too many rules you create, too little? Any recommendations there?
I believe based on your subscription level in QuickBooks, they will limit
Oh,
the
okay.
number of them. I believe that's right. But I haven't had any clients that have hit that I can
Okay.
think of. So as much as you can use this, especially for those, like we kind of said, repeating, recurring things. The one-off things are kind of hard to do in here and not really necessary, but anything that you know that's going to repeat over time, that's definitely something to create a rule for.
Nice. Awesome. That's great. Cool.
Okay, our next tip is to make the categories work for you. So you might have seen, if you've been in QuickBooks, there's not actually a section called categories. And so sometimes this confuses people. So the accounting or more professional term for your list of categories is the chart of accounts. That's just the fancy term for all of your categories. Some of my clients call it labels. Wherever you are taking specific transactions and telling it where you want it to go. This is how you're grouping those types of things together. And that is actually what ends up creating your report, so that when you run a report and you see things in different categories, that is how we are getting it to there, is by creating our chart of accounts and then labeling them as such. So that doesn't have to be complicated. Often people get tripped up because they think QuickBooks sometimes in the beginning, well, I'm seeing it for a handful of my setups or not, where they automatically have a like sample list of chart of accounts for you. And then some of them aren't doing that anymore. So it just kind of depends on the timing, what camp you fall in. But a lot of people seem to think, oh, well, they already have this template chart of accounts for me. I can't do anything to change that, or I don't want to because that probably maps specifically to a tax form, and it does not. So your tax professional or CPA, they will likely group several of your categories together to then go file your and fill out the forms for your taxes. And so we want to make the chart of accounts in QuickBooks as easy or complicated as necessary to make it helpful to make decisions. So I like to advise people, like, this is kind of your management report. So some of my clients, I set up the chart of accounts for them and they never change it. They just keep that template one. Some of my clients really like to see a breakdown of things. So let's say, for example, that you do a lot of networking. And so you might want to see the cost of specific events or specific programs. Well, like in this example that's shown here, you could create even more sub accounts under all of these events so that you can split those out in QuickBooks and know just by running a report how much you've spent for the year on those specific events or networking groups or things like that. Another place I see this helpful is for like advertising and marketing, where you might want to split out, okay, I'm spending this much on ads. I'm spending this much on Instagram ads. I'm spending this much on networking group fees. I'm spending this much on whatever other advertising or marketing you're doing. You could split all of those sub accounts out if that's helpful for you to manage too. So you can make this as, like I said, complicated or not. You can separate or not. But one more tip that I really recommend people do here when it comes to your categories is to break out your income accounts specifically. So I often see people just lump sales all together. And that's fine. It's not really wrong per se. But what's more helpful for decision making is to break that down further into, what are your packages or what common services do you offer? So let's say if you're a coach and you have a 3-month package or a 6-month package or a group program, you split all of those income types out so that you can see what is actually selling more, what is selling less. And then if you had your ads broken out, your ad expense, let's say, and you're running ads to those programs, then you can really see, okay, is my income increasing for the programs that I'm running ads to? And you can make all of those types of decisions if you have the data and the information split that way. So you really want to make it simple, but meaningful is the key here. And that can vary for every single business type. And here I just wanted to show a sample of your chart of accounts. So if you're starting out fresh, you can actually import the kind of template of categories, which is what you see in the spreadsheet on the right, or you can manually add categories. So often people will have some kind of template of chart of accounts already entered in their QuickBooks. And so if you just click on a new account, you'd have to fill in a few of these boxes, but you can create new ones here and there. And you can see that little box right there that says make this a sub account. And that's how you can make it go underneath, like you kind of see under advertising and marketing on the spreadsheet line. You can kind of see how it's indented so it all rolls up into advertising and marketing. So you could see that as a total, but then you could also see all of those sub accounts broken down in more detail. Next tip is to reconcile monthly. Okay. Now, before you tune me out, reconciling sounds really intimidating, but it is a really important step. It's the number one way that you can really catch errors and duplicates in a timely manner. So, what we're doing when we reconcile is we are looking at our bank or credit card statement and we're going to compare that to what's in QuickBooks because it's not helpful if you're running reports in QuickBooks and you're making decisions on those numbers in QuickBooks. But if there's errors and duplicates or missing things, then you're making decisions on bad data and bad information. So after you categorize everything, the next step is to reconcile it. And so QuickBooks makes that pretty easy. You want to go to the gear icon, click on reconcile, and use that function. Do not do this from the bank register. Reach out to me if you don't know what I'm talking about, and I will be happy to help you further. But use the reconcile tab in QuickBooks, and then you're going to compare your bank to QuickBooks. And so it's going to try to do this for you. But what I see sometimes is, let's say you've transferred money from your checking account to your savings account. Well, if you did not properly match those transfers, you're going to have a duplicate because QuickBooks wasn't smart enough at the time to realize that both of those items were related to each other. So that's where I can see errors happen often. I also see this if you're a PayPal user specifically. If you don't know how to match the income in PayPal, then it can look like your income is double what you really were. What this will also help you see every once in a while, QuickBooks will have a quirk on a day and it just doesn't download the transactions, or it will duplicate transactions. You'll see it twice for some odd reason. So all of these types of things happen, and this is the way that we catch them. And so what QuickBooks will try to do for you is it will try to, every time you categorize something, automatically reconcile it. But you'll be able to see in their reconcile tab all of the items that might still be outstanding or weren't matched properly. And so this will really help you catch all of those errors again so that you can make good decisions. And so people often try to skip this step. They're like, oh, that sounds complicated, but it's really important. So try to do this monthly as a habit, as just part of your bookkeeping routine. If that feels overwhelming, then at least do it quarterly. Don't wait until tax time and try to do a whole year's worth because that can be really overwhelming. So put this on your routine of when you do your bookkeeping, make sure that you reconcile it.
Erika, question, another one for me. Say that someone's doing it monthly. Do you have a recommendation on like what time of the month you should be doing it?
Yeah, so typically you just need it whenever your bank gives you the statements.
Okay.
Also, make sure you actually use the statement. I had someone just try to take a screenshot of her transactions from the bank, and you really need that beginning and ending balance. That's what you're looking for so that you know you've caught everything, and you want the statement to tell you that. So often, most banks go from the first of the month till the last day, the 30th or the 31st, and they'll have the statements available like the second or third day of the next month. So that's a good time to grab it. Every once in a while, like especially credit cards, you won't get the statement till the 19th or the 20th or whenever it closes. So just a few days after that closing date of your bank or credit card statement is a good time to try to get it done.
Awesome. Yeah, that's super helpful. Like you said, too, I feel like this is one of those habits that's probably hard to get started, but once you get into it, hopefully feels like a good rhythm.
Yeah, and I actually have a podcast episode on habits because a lot of this is just like boring, right? Or it's like it's easy to put off because it's like, well, this doesn't really um impact my clients, or it's like not it's easy, it's something that's easy to put off. And so some of my clients will kind of treat themselves, and so they'll go to their favorite coffee shop, order a drink, and do their bookkeeping just for the first few months to get in the habit and try to have something to make it fun. If you've ever read James Clear things, they will habit stack atomic habits. So
Yeah.
do something fun with something kind of not fun. That's the principle there. Other of my clients will light a fun candle or order a fun lunch or just something to really try to get them to do it. Other of my clients respond better to pain instead of fun. And so they will not pay themselves until their bookkeeping is done. And so that's also a really good accountability hack to actually get yourself to do it. So, whatever it takes to really form that habit, but those are some tricks that have worked for some of my clients.
Love it. Maybe even some ice cream too to bring it
Yes,
in.
that would be mine.
Awesome. Cool. Well, I'll let you keep going.
All right. The next tip is to run your reports regularly. This also scares people because sometimes there's terms on the reports that you just don't even know what they are or you're not sure what to look for. But my advice to you is just start looking at the reports and seeing, well, what are my questions? What things might not make sense? What things look like they're off? So, for instance, when you run Okay, and I'm going to say this too. Your profit and loss report, people refer to that as an income statement, a P&L, a profit and loss. All of those are the same thing. It's just a report that shows all of your income and all of your expenses and the net of that. In general, this is grossly simplified, but in general, the net is what you're going to pay taxes on. I had a client that was paying estimated taxes only on her gross income without the expenses. So she got a nice refund, but she didn't need to be paying that much in taxes. So you're in general paying, plus or minus some other deductions on your net income. But see if you can spot some trends and patterns or things that just might not, maybe things that look like you've categorized them inconsistently. So let's say every single month you pay rent if you're a therapy practice, and all of a sudden 1 month there's no amount in the rent box. Or for that month, there's no amount in the rent category. Well, you either categorize incorrectly, you missed a payment, something like that. So, running a report monthly or month to month will help you catch some of those types of errors. You can also ask yourself, do any of these look high or low, like they might have been inconsistent or inaccurate? And then you can kind of take it a step further once you're fairly confident in the accuracy of, okay, well, what is this telling me? Like we had kind of said about the different income types and packages, you can see which ones are selling the most, which ones are selling the least. Can you see a seasonal pattern? Are there some other things you can anticipate? I actually had one client do this, and she was looking through her expenses and she found a subscription that she forgot she had signed up for, and she was able to cancel it and save $100 every month because she realized I signed up for that months ago and I'm not using it. So, all of those types of things you can start to see and really also highlight any questions that you might have of, I don't understand why this item isn't here. I don't understand what this word means. Like, why is this placed in a particular spot? Especially on the balance sheet, I think that's where a lot of business owners feel like there's a lot of words that don't make sense. And so just start to highlight those, and you'll see some of the questions that you might be able to get some support and help with. But also, you'll be able to see trends and be able to see and track your progress and be able to celebrate wins. All of those things can be done when you actually look at the reports.
Awesome.
Okay, our next tip is to understand red flags for common mistakes. So, we talked about mixing personal and business. Reconciling is the way that you can catch some duplicate income. But again, if you've run your report and you're like, I did not make 80,000, I've only made 40,000 this year. What is going on? These are the types of things that when you're actually paying attention and looking at your numbers on a monthly basis, you'll be able to catch before it's too late and you have a bigger mess. I often like to ask people to really look through their categories like uncategorized or ask my accountant or just kind of miscellaneous, like those lump categories. Every once in a while, those are fine to use, but often that really doesn't tell us anything helpful and it makes us have to dig into what that was really about. So just make sure that you don't have a high balance of transactions or a high number of transactions in those types of accounts, but that you're kind of going through it and actually working through some of the problems if there are any problems. PayPal again or Venmo is somewhere that people often forget about. I was actually talking to a business owner who said that her bookkeeper didn't record any of the income that they had gotten from Venmo. And so they got audited and owed thousands of taxes because there was a ton of income from Venmo that they had not reported or reflected anywhere in their books. So those are all types of things you just want to be thinking about. Okay, have I captured every income? Is there anything that I paid for out of pocket, on accident every once in a while that really should be in the books? Any of those types of things can be red flags or just like easy things to that can lead to big mistakes. And so you want to avoid those by actually categorizing, actually reconciling, and reviewing your numbers.
Okay, two questions actually for you. You just mentioned, say, for example, you paid for something with your personal account that should be recognized here. Is that something someone could fix and like move it over to your business account?
Yeah, you can definitely manually add it into your
Okay.
QuickBooks. Some people will then decide if they want the business to pay them back, or some people will decide, no, I'll just call it basically an investment into my business where I took personal money and used it and invested it into the business. But yeah, we can manually get any of that stuff into your QuickBooks. I see that too when you are maybe new to business and you had a bunch of stuff that you used your personal account in the beginning, and then you got your things organized and set up and got your separate account. We can get all of those things that you spent money on or received money from in your personal account. We can get it manually added into your QuickBooks so that you have a nice, clean picture of what really was relevant.
Awesome. Yeah, that's great. And then you also alluded to in a scenario, right, where someone missed some income, then owed taxes. Anything else that like, some of these are red flags or mistakes. What are some of the other like tough situations that could come up if these red flags are unnoted?
Yeah, I've seen some issues with like sales tax, and that being, which y'all will speak
Yeah.
to. I'm sure I've seen some issues there. So just make sure you have that system and process working. I've also seen one thing we haven't mentioned is if you have any loans. If you owe money and you haven't split the principal and the interest pieces separated, a lot of time the entire amount can get categorized to either the loan or to interest. And so that can inflate or deflate your books if you haven't split the loan and principal balance or the principal and interest balances out. That can be an issue. And then we talked about PayPal. I feel like PayPal is a main factor too of just not getting it matched right. You have to follow a specific process. Otherwise, it will show up like 3 different times in your QuickBooks and it can get really ugly.
Mhm.
So, those are some other common traps that I see, common places that it's just easy to forget about those tiny little minute details that really can make a difference.
Right. Totally. Yeah. Things definitely to look out for. It's awesome.
Okay, and my seventh tip is to create a simple bookkeeping routine. This helps you stay consistent. So, whether you have a task manager and you just have those different tasks as a workflow there, you want to categorize if you can weekly just because it's fresh. And so that will really help you remember. Also, when you're categorizing, this is a bonus tip, but you want to manage your receipts because receipts are something that an IRS auditor will look for. And if you're ever audited, what they're going to do is go through your transactions and really ask if this was a legitimate business expense. And so you need to have something that proves, yes, this was an ordinary and necessary business expense. And so that's why we really try to manage and keep up with receipts, because that helps prove some of that. Back to our Amazon example, like if you just have Amazon on your bank statement, Well, that's really hard to know. Was that pajamas or office supplies? Like, you don't know just by looking at it on a bank transaction. And so they're going to want more detail for those types of things. So, as you're categorizing, if you can add receipts in QuickBooks, you can do that in several ways. You can use their receipts feature and try to match it will try to match your receipts to your bank transactions. You can also just create a Google Drive folder and keep all of your receipts there. You can attach them manually into QuickBooks as well if you want it linked specific to that expense transaction. You can drag and drop a photo of it. You can even use the QuickBooks app and take a photo of the receipts on your phone, and then it will upload into your software. So just the tip here is there's several ways that you can manage receipts. Pick the one that works best. I have a podcast episode on that too. Pick the one that works best for you, but just have it available and easily ready and available if you were ever audited. And then you're going to want to, like we mentioned, review your rules, reconcile, review your reports. And then one more thing that business owners often forget that can lead to large amounts of tax deductions is your mileage. And so if you use QuickBooks, you can start and stop a trip and it will document that for you. But I have put this in the monthly bookkeeping routine because it's easy to forget. Like now it's September. If I took a trip in February, like I might not remember that, like where I went, and I'm going to miss it. And so that is easy amounts of tax deductions for you that you're going to miss out on if you don't keep up with it. So I like to review my calendar and look through if I've done any trips and then add that mileage if I forgot to start and stop the trip in QuickBooks. You can also just add like an entry for your mileage in QuickBooks as well. And then you'll get a report at the end of the year that you can send to your CPA or use if you file your own taxes to calculate the mileage on. But again, pick a money date, pick a day every month. Once a month that you're going to actually knock out your bookkeeping and get it done until you're ready to outsource it to a bookkeeper.
Awesome. I love it. Erika, I'm already learning a ton. I've got a bunch of notes and I already can see some good questions in too. But before we
Awesome.
get to that, be remiss not to jump in with one little bonus tip from the TaxCloud team. So as everyone knows, signing up for this webinar, we really want to help you manage your books and stay organized. We also want to help you stay compliant. And a big part of keeping your business compliant is sales tax. So when we think about sales tax, I think the biggest tip I would give everyone here today is to try to be proactive. Similar to what Erika shared, it may not be your favorite thing to go spend time on now, but it would be a lot less enjoyable to go spend time on it later when there's actually issues that you have to resolve. So being proactive is about spending the time up front, getting yourself in a good position so that you have peace of mind that it's really handled moving forward. So I'm sure everyone on here is varying in terms of the types of businesses, or if you have clients, they have different businesses, right? So sales tax is going to look very different for all these different types of businesses. But when it comes to being proactive, I think three kind of things I wanted to quickly touch on is number one is nexus tracking. So depending on how familiar you are listening in on sales tax, nexus is essentially where your business has liability, right? So there's kind of two parts that your business could have nexus. You could be physically located there. So that means you have an office there, you have employees, a warehouse maybe. So there's physical component, right? But then there's also an economic component. So you're not physically located there, but say you're starting to grow sales and you're surpassing a certain threshold of transactions or revenue, that's going to mean that you now have nexus. So one thing you want to be doing in your business is tracking that, right? So you'll know where you're physically located, but as your business grows, you're likely going to see transactions grow in different states, which might mean that you now have liability and you need to start collecting, filing, and remitting in those states. So to stay proactive, you want to track your nexus in real time and know where you're going to need to start to register in new states. Another common thing that can come up as an issue, and Erika talked about this quite a bit, is that you might be selling on different channels or receiving transactions on different channels or avenues, right? So when it comes to sales tax, you don't want to just think about your channels and sales tax in that channel separately to the others. You need to be thinking about your business holistically across all of those channels. Example is, say you have a Shopify store where you do direct to consumer purchases, but you also do maybe wholesale and you're doing invoices on QuickBooks. You want to be tracking all of those transactions in one place to know, okay, holistically, I have nexus in these areas and I need to be calculating and collecting across my different channels. And then the last thing I want to call out is that as your business grows, it's going to add more time to your plate. So always look for automation where you can. That's something where TaxCloud can come in. This is not meant to be a pitch of TaxCloud, but if you are looking for some help there, we definitely would love to chat and can share some resources. But my key takeaway really is don't wait. And similar to what Erika has shared today, stay compliant as you grow. Without further ado, I know we've covered a lot today, some really great tips. Erika, I really appreciate you sharing. It looks like we've got some good questions in the chat, so I'll pull those up. I'll make one more call out as well for anyone that hasn't asked. If you've got questions, throw them in there, and then we can see what else comes up. So we've got a question from Deirdre. She asked, when using personal funds as seed money to start an LLC, how is this handled in first business tax filing? Are you familiar with that, Erika?
I am not a tax expert. So verify this with your tax professional. I believe there's thresholds of amounts that are like able to be deducted or not, but I believe it's still just a expense as part of the business. So like if you use those personal funds, we would just still categorize it to that, coaching program or to the office supplies and equipment. I think it would still go on the forms just as if it was income from the business, but double check that with your tax professional.
Yeah, awesome. Thank you. Cool. Patricia asks, do you have a list that you look at to confirm that you've covered everything?
I do. I actually have a free monthly bookkeeping checklist. I can send that to Kristina and maybe we can link it with the recording. Yeah, it will just run through, okay, do these things every month and you'll stay in really good shape. You should be able to find that. Anyways, yeah, I'll get it sent to you. And then from there, some of my clients like print it off and actually mark it off every month, which is really fun. But others have just like created a task in their task manager or a reminder on their phone that have all the steps in there to stay in good shape.
Nice. I'm a classic. I still write down all my notes on like a notepad.
Yeah, I was shocked when she told me she printed it like every single month and marked it. But I'm like, hey. And then she said she would write notes or like things that were confusing to her right on that piece of paper so that it stayed like top of mind.
Awesome. Yeah, I love it. Awesome. We have another one that asks, can you explain in detail how to book PayPal transactions? Any tips there?
Yes. Okay. So hopefully this will make sense if you're the PayPal user, but you want to do the transfers to and from PayPal as transfers. So you'll see it almost like any other bank transfer. So like when it goes in and out of PayPal and basically funding from the business checking account or whatever account, funding it back and forth, you want to make those the transfers. And then when it comes through as the actual charge in PayPal, that's what you want to categorize to your office supplies or business coaching or whatever that actual line is. Put that expense to the actual expense type that you would any other expense, and then do the transfers back and forth as a transfer so that they match properly. So hopefully that makes sense, because otherwise it will show like 3 different times because it's that transfer in and out and then it's the actual charge. So that's how you want to prevent any duplicates.
Awesome. Love it. Yeah. And whoever asked if you have follow-ups, let us know. But that was a great answer. Awesome. Patricia, I see similar also asking about the checklist, asking about the podcast. So we do have in the slides actually already Erika's podcast linked in there. Erika, anything you'd want to share too about the types of stuff you cover on the podcast?
Yeah, well, I'm so excited that y'all are asking about it. We actually won a Podcast of the Year award this year, which was just
Congrats.
really exciting. So yeah, we cover all things bookkeeping, QuickBooks, catching up, cleaning up QuickBooks, a little bit of money mindset, and just my hope is to really empower entrepreneurs who are doing the bookkeeping themselves, at least for that season of business where they can't quite, you might not be able to afford a full service bookkeeper. You'll find lots of tips over there. And then all the way to if you're ready to outsource, there's also just tips on reviewing your reports in a little more detail than what we covered today, things to be looking for, red flags in a bookkeeper, because I have unfortunately had a couple clients have money stolen from them this year. So it's also just, I'm really passionate about empowering and educating the business owner, no matter if you're the one doing it or if you're outsourcing, so that you know the things to look for and that you can make really confident and good decisions on the numbers that you have. So, yeah, come hang out with me over there.
I love it. I love your mission too. I know I've shared this, but that was kind of what really drew me to your podcast and chatting with you as well. I think these types of topics, when it comes to finances, your bookkeeping, your sales tax, can be really complex and complicated and scary. So I love ways to simplify, but also, like you said, do it in a empowering way to help people feel more confident as well. It's awesome.
Yeah, my hope is that if there's questions that you're like afraid to ask in a group because you feel like you should already know the answer, or you feel like everybody else already knows and I don't, I hope to answer those questions over there so that you know exactly the answer that you're looking for.
Awesome. Yeah, that's great. Perfect. Well, I think that's all of the questions we have. I see a message in here about it's actually a TaxCloud customer. So Tim, thanks for sharing that feedback. I'm going to flag that after. If you don't mind actually just dropping your email address in the chat, I'll take a look at that and make sure to escalate it to our team after this. And appreciate you raising that feedback. Awesome. Before we jump, I'm going to go through one more slides. If any other final questions come up, like I said, we've got a lot of resources coming your way after today's session. So tomorrow morning, we'll send over the recording, we'll share the slides, and then we'll also follow up over the next couple of weeks with more things Erika mentioned, right? We'll share the checklist and maybe some podcast episodes as well. So in the meantime, we've got some links for you to check out Erika's bookkeeping services or podcasts. If you're looking for help with your sales tax as well, come check out TaxCloud. We've got some links there. But I think that is everything we have. Erika, I really appreciate you taking the time today. This was awesome. I know I've learned a lot. I hope everybody listening has learned a lot. So like I said, we'll be sending over the resources. I think that's all we've got for today.
Thank you so much for having me. I love doing things like this, so I really appreciate it.
Awesome. All right. Well, thanks everyone. We will talk soon. Bye.